Welcome back to Investing Talk Podcast.
Hi, everyone. Today we're looking at a company that presents a really interesting puzzle, almost contradictory, actually.
That's a good way to put it. We're going to examine MicroCloud Hologram. The big question we want to tackle for you is pretty simple. Is MicroCloud Hologram a good time to buy right now?
Yeah, because on one hand, they've just reported some numbers suggesting this massive financial turnaround, from huge losses to actual profit.
Or a really dramatic shift.
But then you look at the stock itself, and it's showing this wild volatility, the kind you often see driven more by, let's say, online forums and speculation than solid fundamentals.
So our job today is to try and separate that signal, the real company performance, from all that market noise.
Exactly. We need to parse what's real and what's maybe just hype.
Absolutely. We'll go through the financials, the plans, the risks, the whole picture. Now, if you find this useful, please do take a second to subscribe, maybe give us a like, and drop a comment.
And definitely let us know in the comments if there's a specific company you want us to look into next time. We really do build our schedule based on what you're asking about.
Okay, let's get into it. Starting with this, stunning financial turnaround we saw reports of over the last few months.
Right. So first half of 2025, MicroCloud Hologram reports a net profit of $33.1 million.
And just to give that context, what were they doing before?
Well, that's the kicker. The previous year, same period, they posted a loss of $121.7 million. So it's not just getting back to zero, it's a massive swing into the black.
Wow. And what drove that?
Primarily, it looks like a huge surge in revenue from their core holographic solutions. They reported growth of, get this, 726% in that segment.
700%. That's astronomical.
It really is. And that kind of number, it forces people to pay attention, even if they've been skeptical before.
And did that profit translate into, actual strength on their balance sheet, or was it just an accounting thing?
No, it seems pretty real operationally. The key thing is their cash position jumped 153% compared to last year. They're sitting on about $223 million in cash now.
Okay, so real money.
Real money. And just as important, shareholders' equity, basically the net worth of the company, that rose almost 300%, 297% to be exact, reaching $400 million.
So that profit gave them some breathing room, some real financial heft.
Exactly. It provides the kind of foundation, the operational capacity you need if you're planning something big.
Which it sounds like they are. They announced some pretty aggressive expansion plans back in August.
They did. They detailed plans to invest over $400 million into next-gen tech. We're talking quantum computing, quantum holography, blockchain stuff, AI, AR, the works.
Wait. $400 million investment, but you said they have $223 million in cash?
Ah, good catch. That's the insight, right. Committing $400 million when you only have $223 million signals huge confidence, maybe even overconfidence.
Or that they're planning to raise more money soon? Debt.
Yeah.
Equity.
Almost certainly. It means they're leveraging their future prospects heavily. It's a high-risk, high-reward strategy. They're betting big on themselves.
And are they focusing that investment anywhere specific or just broadly future tech?
They're definitely emphasizing the automotive sector, pushing their holographic LiDAR and digital twin solutions for ADAS advanced driver assistance systems.
So trying to get into those potentially high margin but also highly regulated future car markets.
Precisely. It's a bold move into a tough space.
Okay, so profits up, cash up, big investment plans. How did the market react? Especially given this company seems to attract a lot of retail interest.
Well, the stock price jumped pretty quickly after those earnings. It went above $6 a share for the first time since July. But the really wild part was the retail reaction.
What happened there?
Sentiment on platforms like StockTwits apparently went to extremely bullish, and message volume about the stock exploded up over 4,000%, a 4,083% spike specifically.
4,000%. Okay, so it instantly became a huge momentum name for retail traders.
Absolutely. Which leads us nicely into what to watch for over the next few months, because the big question now is, can they keep it up? Was that H1 result a fluke or the start of something real?
Right. Sustainability is key. So what's the most important date or event we should be looking out for?
The single biggest thing in the short term is October 15th. That's their Q3 2025 earnings release.
And what are investors looking for there? Just another profit number?
Not just the headline profit. They'll want proof this turnaround has legs. Especially, they'll want details on how those big investments, like in LiDAR and digital twins, are progressing. Is there an actual pipeline of customers? Or is it still just R&D?
Got it. Details on deployment. Beyond the company's own reporting, are there other market events that could impact the stock? Things that might add to the volatility?
Yeah, there are a couple. November 1st, you've got the major ETF rebalancing for indices like the Russell and Nasdaq. If the stock keeps its price and volume up, it could potentially get added, forcing funds to buy.
Okay, so potential forced buying.
Potentially. And then early December, around the 3rd, we get the institutional ownership updates, the 13F filings. That's when we'll see if any big money managers actually bought in after Q3, or if they're still staying away.
Interesting. And anything related to their actual business, like real-world use cases?
Well, you could look at November 12th, China Singles Day. It's a massive shopping event. Watching the reports from that could give some clues about how well their AR and holographic tech is being adopted in actual consumer products.
Ah, okay. A potential read on consumer tech adoption.
It could offer a confidence boost if the tech shows up prominently and successfully.
So with all these potential catalysts and the recent results, it's probably not surprising there's a lot of speculative buzz around this name.
Oh, absolutely. The rumor mill is working overtime. There seem to be four main areas people are whispering about.
What are they?
First, possibly linked to that ETF rebalancing, is talk of potential Nasdaq Q100 inclusion. That's usually seen as prestigious, brings more visibility, but it depends on sustaining that volume and market cap.
Okay, index inclusion hopes. What else?
Second, rumors of strategic tech partnerships. This is a big one. People are hoping for a tie-up with a major tier 1 auto supplier or maybe a big cloud company. That would really validate their tech, especially the LiDAR.
A partnership would be huge. Makes sense. Number 3.
This one ties back to that $400 million investment plan and the mention of blockchain. There's speculation about some kind of blockchain tokenization project, maybe using blockchain to authenticate holographic content, or for selling digital assets. It's pretty vague still.
Interesting angle. And the last one.
This is maybe the most speculative, the idea that MicroCloud Hologram could be an acquisition target.
Ah, the M&A angle.
Yeah, the thinking is maybe a larger tech firm, perhaps Asian or global, wants their proprietary holographic IP, and the recent stock run-up is partly due to traders betting on a buyout.
So, inclusion, partnerships, blockchain, acquisition, lots of potential catalysts fueling the speculation.
Powerful narratives. But, and this is crucial, they are still just narratives and rumors right now, unconfirmed.
Which means we have to balance all that potential upside against the current reality shown in the charts and the underlying risks. Time for a reality check.
Exactly. We need to look at the technical picture and the more fundamental concerns.
So let's start with the technicals. You mentioned the extreme volatility. If the financial news was so positive, why are the technical indicators looking, less rosy? Isn't the market just getting it wrong?
It's not necessarily wrong in the sense of being irrational. It's just reacting very strongly to momentum and short-term news, not necessarily long-term value. September was incredibly volatile. Prices swung wildly, roughly between $7.50 and $13.20.
Huge swings.
Yeah, and intraday moves of 20% or more were common. That's not really an environment for long-term investing. It's more suited for, high-frequency traders.
And the actual technical signals right now,
Yeah.
are they bullish or bearish?
Currently leaning bearish despite that strong H1 report. You've got the 50-day moving average trending below the 200-day moving average. That's often seen as a negative sign for medium-term momentum.
The so-called death cross pattern, or close to it.
Something like that pattern, yeah. Also, the relative strength index, the RSI, keeps spiking above 70 during these rallies. That suggests the buying gets overextended or overbought very quickly.
So the rallies burn out fast.
Seems like it. And more recently, the MACD indicator lines crossed downwards, which typically signals short-term weakness might be setting in again. The technicals suggest the speculative bursts are fading fast.
Okay, so technicals look shaky. Now, what about the fundamentals? You mentioned transparency issues, even with that big profit number.
Right, this is where it gets really tricky. That H1 profit was great news, but when you dig into the source material, which pulls from their SEC filings like the Form 20F from March 2025, some gaps appear.
Gaps? Like what?
Well, based on the available extracts, it's hard to find clear, verifiable figures for things like profit margin consistently or detailed net income breakdowns across longer periods. And maybe more importantly, there's apparently no explicit detailed information on their debt load or specific cash flow items in those recent excerpts.
Why is that so important?
Because without knowing their exact debt situation or how cash is actually flowing in and out from operations, investing, financing, you can't properly assess their liquidity or their long-term financial health. You don't know how sustainable that $223 million cash pile really is.
So a lack of clarity on key financial health metrics. Is there anything else from the filings?
There's also a point about the revenue mix. It seems the share of revenue coming from their core holographic technology services has actually been shrinking. It was over 68% in 2022, but down to under 56% in 2024.
What could that mean?
Two ways to read it. Optimistically, they're successfully diversifying into new areas. Pessimistically, maybe their original core business is actually slowing down, which makes that big profit jump even more surprising, or perhaps reliant on newer, less proven segments.
Okay, so some questions around financial transparency and the core business trend. But you mentioned a primary risk earlier.
Yes. The biggest red flag, the one that likely keeps serious institutional money on the sidelines, is the operational risk tied to PRC legal and regulatory compliance.
PRC, meaning People's Republic of China.
Correct. The filings apparently contain explicit language warning that equity ownership is challenged by the PRC authorities.
Okay, equity ownership challenged. Can you break that down? Why is that specific phrase so concerning for investors?
It likely relates to the structure many U.S.-listed Chinese companies use, the variable interest entity, or VIE structure.
How does that work?
In simple terms, if you buy shares of MicroCloud Hologram on the U.S. market, you probably don't own a direct piece of the actual operating company in China. You own shares in a shell company, usually set up somewhere like the Cayman Islands, that has contracts with the Chinese entity.
So you own contracts, not the company itself.
Essentially. And that phrase, equity ownership is challenged, is a warning that the Chinese government could, potentially at any time, decide those contracts aren't valid. Or they could impose new regulations that effectively cut off the cash flow from the Chinese business to the offshore shell company shareholders own.
So the government could just invalidate the whole structure.
It's a known risk. It represents the potential for sudden regulatory changes, government intervention, or even forced delisting that hangs over these types of structures. It's a fundamental systemic risk factor.
Pretty significant shadow over everything else.
It really is, and it probably explains why, despite the recent stock surge and profit news, there's basically no major Wall Street analyst coverage for MicroCloud Hologram right now, as of September 2025.
The big firms are staying away.
Largely, yes. The professional investment community seems hesitant to engage, likely due to these transparency and regulatory issues.
Okay, so let's try to synthesize all this, pull it all together.
Right. What we have is this incredibly conflicting picture. On one side, you have that genuinely impressive H1 profitability, a huge turnaround, plus this massive commitment to future tech like quantum and LiDAR. That's the promise, the potential upside.
The bullish narrative.
Exactly. But on the other side, you have extreme stock volatility driven by speculation, not fundamentals. You have significant questions about the transparency of their core financials, particularly around debt and cash flow. And looming over it all, you have this acute systemic regulatory risk from operating under the PRC structure.
A very mixed bag indeed. Which brings us to the bottom line. Our final assessment rating for the question, is now a good time to buy?
Given all these conflicting factors, our overall assessment rating has to be quite cautious. We're giving it a 2 out of 10.
A 2 out of 10? That's pretty low. Why so decisive?
Well, while that H1 profit jump is notable, the current price action just seems way too detached from fundamentals. It looks overwhelmingly driven by speculative momentum. More importantly, the lack of clear visibility into their core financial health, specifically verifiable cash flow and debt levels, combined with that very real PRC regulatory overhang, makes it incredibly risky.
So the risks just outweigh the recent positive news right now.
For a prudent investor, yes. It feels like a low conviction bet, more of a gamble on market noise than a solid investment case at this point.
Okay, so breaking that down by investment horizon. For someone looking short term.
Highly risky, highly speculative. Your returns or losses are likely going to be driven by technical chart patterns, market sentiment, maybe those rumors panning out or not by predictable company growth.
And for someone thinking long term.
It's still unattractive from our perspective, mainly because of those regulatory concerns. You're fundamentally investing in an opaque structure that faces a constant, unquantifiable threat of sovereign intervention. It's very hard to build a long-term case on that kind of foundation.
So MicroCloud Hologram really serves as a stark example. A company can post some genuinely compelling numbers, but structural issues and speculative frenzy can completely overshadow them. Caution seems very much warranted here.
Absolutely. And maybe a final thought for you, the listener, to chew on based on what we've discussed. Let's imagine they do successfully execute on that $400 million plan. Say they make real breakthroughs in holographic lidar and actually announce a major strategic partnership with a global tier 1 firm.
A best case scenario on the execution front.
Right. The question then becomes, how much would even that genuinely reduce the persistent systemic risk tied to the PRC regulatory environment? And perhaps more practically, at what stock price would the market finally decide it has adequately priced in that lingering sovereign risk? It's not an easy calculation.
A very tough question. Something to really consider if you're tempted by the potential upside here. Okay, that's our look at the sources on MicroCloud Hologram. Thanks for joining us.
Thanks, everyone. We'll catch you on the next one.